welcome to our technical analysis webinar session. See, right now we have Patricia Lawrence and Raymond Singh. How are you guys doing? Can you hear me? Hi, Patricia. Very well. Thank you. I'm glad you can hear me clearly. Yeah, guys, we are in a market that's very choppy. That is very difficult to really analyze right now. Well, I'm looking at the Aussie. Let me just put it up, or the top 40. We are down 0.8%. Sorry, 0.8. We are down. We are down 79 basis points. Most of our stocks are down. Some of the stocks that I can mention is Truworths. Truworths is down 4.2%. Woolworths down 3.2%. MTN down over 2%. Pick and Pay down 2%. AVI down 1.74%. Mr. Price down slightly, down about 47 basis points. And Exaro up very strongly. The rand is also very strong against the US dollar. The rand is 36 basis points stronger against the South African rand. Hi, Nicolene. So I don't know. We'll just have a look at a couple of shares that we looked at yesterday, and we're going to look at the currency pair that we did, the Euro-Japanese yen. Currently, it seems to be playing nice. It hasn't really broken down. That's the picture that I have right there for you. Don't let those lines confuse you. I have a few lines there. But all those lines are doing is to mark the falling trend line or the falling market. The falling market that we have here. I expect a break below this line here. This line that is marking our triangle here. Our triangle starts here, where I have my cursor on the Euro GBP. And the bottom line is here, so I'm expecting a break below this line. We haven't had like a clear break below this line. If we get one, I think we're really gonna have a push a lower on this one. But I mean, right now it's still really very dicey. But I mean, for the day we are down like 12 12 basis points. Is there anything that you guys have, or any questions that you have that you'd like me to address for you before we carry on? When did you get this trade idea, Nicolene? When did you get it? Today. Oh, okay. Okay. Where would you like to move your stop to? Oh, okay. First round. Okay, let me change this to first round. No, don't stress. Don't stress. Focus on the process. The stress is never going to help you there, Nicolene. The main thing is the process. As long as you followed your process, you are happy with everything that you did, the money will come after. Don't worry about making or losing money. That's not important. Okay, let me check. Bought it 69.71. Yeah, Nicolene, no, it's fine. Let's have a look at it. Let's have a look at it. Let's try and look at. Okay, you're saying your stop loss is at 68.50. Right now, that's 68.09. Mhm. Okay. Okay. Let's first have a look at the daily. Well, the daily. Let's check the weekly quickly. Uh, uh, well, according to me, Nicolene, the stop loss on this one should be around 60, around 66. If you have your stop on it, it should be around 66. But I mean, if you put your stop around 66, you should make sure that your risk reward ratio balances out. It makes sense. But I mean, when I look at it right now, I haven't really done like a proper analysis on it. But I'm just saying that maybe if you have your stop below 60, 66, I think there you can do well. Make your stop maybe what? Let's check. What was this month's close? 6650, yeah, 66 sounds okay for me right now. But I mean, if you move your stop, you should also move your take profit, which is a bit of a problem. But I mean, if you look at the monthly chart, the monthly chart is looking positive. It's I mean, first trend is still on a rise. I think that it's likely to rise going forward. But I mean, let's quickly go back to the daily time frame. What you guys should always look at. I always ask you guys to check this one out. Check your daily. Your daily, you have your moving average above your price there. There is a clear no signal. You do not buy when you see that. It's saying no, do not buy. That's what that signal is telling you. If, even I mean, it means that you don't buy because I mean you're below your moving average there. So there's a good chance that on this thing it could still come down to, in my opinion, when I look at it now, I think that we may still come down to 64, 60, 60, 64, 50, 65. If that area fails, I'm looking at 61. I'm looking at 61. 61 is the next level uh, where we will likely come down to if it does happen that the sell-off continues. Yeah. I understand. These things happen. But I mean, you are below your moving average there. Another thing that I want to highlight to you. Let's check the 1 hourly chart on the same stock. Hourly chart on the same stock. What time did you what time did you buy this stock? Oh, you got it at 9. Okay, because I see at at 10, well, I mean, at 10 this morning, it was already trading below its moving average. At 10 this morning, it was already trading below its moving average on the hourly chart. So there you weren't really supposed to go in and buy this one. Let me quickly show you what's going on here. Check this line here. Okay, and here again we have this line. Here again we have this line. We are trading below our moving average there. The way it looks like we are going to drop a bit more. I don't know to where, but I mean we may still come down to about 66. Yeah, to about 66, 60, around those levels. The way that it looks, you must now. What you need to do is to keep an eye on your hourly moving average if you want to monitor this trade. If you want to monitor this trade, keep your eye on the hourly time frame and make sure that you monitor that moving average. As long as it is staying below the hourly moving average, I cannot see this thing picking up or taking off from these levels. It's very important that you keep an eye on that, because I mean that is an indicator of momentum. If it's trading below that average, it means that the momentum is against you. If you are buying, it means that it's against you. You first need to see it closing above, like you see here where I have my cursor. The bar close above the moving average. It was at 11 and the price started picking up. That's what you want to see. But I mean, if you have a situation like this, where the hourly is below the moving average, it means that you are actually moving against the momentum there. Okay, let me look at your comment. Okay, Patricia is saying crumbs. So I don't know what that means. So you're saying that it's better to be bumped out and re-enter than try to adjust the trade idea. Patricia, if your trade is well planned, there's no need for you to adjust your stop. All you need to do is to wait for the market to give you the outcome. As long as you followed the process, you do not need to worry about the results. You've done everything that you need to do. All you are waiting for now, you are just waiting for the market to give you the outcome, to give you the results. If the market says we'll penalize you here because you did not do enough analysis, there's something wrong that you did in your analysis, the market will take money from you. If the market says we're going to reward you here because I mean you did a good job in analyzing the market will do that. So you do not really need to worry if you've done your homework. It's all about doing your homework, so there's no need to adjust. But I mean, if you did not do your own homework, you may want to adjust. I know that sounds harsh, Nicolene, but it's important to plan your trade first before going into it. You know, like getting trade ideas is a good thing, but when you get them, make sure that you do your homework. Okay, let me go down. Patricia, I also bought of that trade idea. Patricia, I'm disappointed. Why did you buy? You had your moving average above your price. You weren't supposed to buy. You were supposed to wait for your price to cross above the moving average, cross and close above before going in. Because I mean, what we're trying to do here, we're trying to be conservative and disciplined. That's what you're trying to do. Okay, Nicolene, month chart, week charts. Okay, you're saying month chart and week chart and our chart looked well, and it was bearish. Oh, you mean bullish? Oh, okay. Well, the monthly chart looks good, but I mean, let's go and check the weekly chart. The weekly chart does not look bullish there, Nicolene. I'll show you now. It doesn't look bullish. You see this bar here? This is last week's bar, the one that I've highlighted there, where I have my cursor on. That is last week's bar, and this is the current week's bar, and the week hasn't ended yet. So you know, what we always say, we wait for the bar to finish first before we do anything. So this week has not finished yet. It's only, this bar is only gonna finish forming on Friday. As long as it is still intra-week, it doesn't mean anything. You wait for the week. Once the week is over, then you know you can use that bar as part of your analysis. Okay. Okay. Do you agree with me there, Nicolene, that you need to wait for the bar to finish? Okay. Okay. It's fine. 74. Thank you. Okay. What do I do now? What do I lose? Okay. Let's. Why don't you just take? Why don't you just take a loss on this one, Nicolene? Let me check where you went in again. Let me see. You went in. You went in at 69.71. Well, I mean, if I were you, I would just go in and then close this one and take a loss. Because I mean, you don't want to be in a trade where you're not too sure what's going on. You know, you're trading below your moving average on the hourly time frame. I'll just go in and take a loss, a small loss, then wait for it to come down maybe to 68. Just take a loss there, sit on the sidelines, watch, make sure that you keep an eye on that moving average. Okay, yeah, let's. Patricia, maybe you should do the same also. Maybe just get rid of it and wait for it to agree with your setup first, or with your strategy before you take any trades there. Raymond, are you there? You haven't said anything. I've just been communicating with the ladies, and you haven't said anything. Okay. Patricia, what else would you like us to have a look at? Hi, Arun, how's it? Also very well, Arun. Any issues from your end? Any particular challenges that you've encountered? Any stocks that you've traded where you're now feeling maybe a little bit uncomfortable, or with money all the way, just making money? Arun, you just lost money in first run. But what happened there, Arun? Why did you lose money? I was talking to the ladies here, Patricia and Nicolene. They are telling me that they've lost some money. Well, I mean, first round is not looking good, and they aren't happy with the way that it looks. But I'm saying that I mean, every time in our seminars we say that you must first do your checks before you go into a trade, not just jump in. Make sure that you plan it. You followed the trade last week. Arun, was that a first run trade you're talking about? Oh, okay. Last week. I don't know. Let me check. Just want to check something here. Okay. Let me quickly check here when this trade idea was sent out. We'll talk about it now. Okay, it was on the 8th. First run 71.15. Take profit, stop loss $70. Sure. Okay, Arun, let's quickly do this. I want us to go back here. All of you guys, please pay attention. On the 7th, we had a close. No, okay. Let me first finish with Arun Nicolin. I'll come to you now. But I mean, please pay attention to what I will be saying here. You see, on the 7th, it was on a Wednesday. We closed at 71.94. We're below our 10 SMA on a daily time frame. On Thursday, the 8th, we closed lower. We're down 3.5%. We're still below our SMA. Again on Friday, we closed lower. We're down 4.64%. So there was no reason for anyone to take a long on this one, unless if maybe you were using your what can I call it? Maybe your support and resistance. But I mean, it's very dangerous to go into a trade without anything supporting it. Maybe like if you have maybe something like confluence, which is what I always talk about. Maybe there is a trend line supporting your call, or there is some horizontal support on that, then you can go in maybe and take a trade there. But here we're below the moving average on the 10 on the daily. So really, there was no need for one to take the trade. I agree. The monthly looks okay. But I always say that you use the daily to time your entries. Use your daily to time your entries. If your daily is saying sell and your monthly is saying is saying buy, you wait for the daily to first say sell before you go in and buy. You wait for the daily to agree with your monthly before you go in and buy. Nicolin, I'm sorry, you don't have to. You don't need to move your stop loss, Nicolin. Just leave it there. If the market comes down, it takes you out. It's going to take you out. Take a small loss. It's fine. You're going to have many other trades where you're going to make money. You're going to make money. Don't worry about it. Not putting in or moving your stop loss, could actually bring you more problems, because you could end up wiping your account. Because what happens if the market decides maybe to fall another 10%? The market fell in the States last night. And tomorrow is the futures close out. I don't know exactly what is going to happen. If the situation worsens, you may lose a lot of money. It's better to take the current loss that you see right now. Like they say, your first loss is your best loss. Just take whatever loss that you've suffered now, as long as you had used your risk reward ratio. I mean, effectively. It's fine, Arun. It happens. The market has been going up a lot. I know that sometimes we get to forget or overlook some of the things, but I mean, you should know this one better because I mean you've been following me a lot. I mean, every time your daily, I mean, every time it agrees with the monthly, you can just go in and buy, and you'll make money almost all the time. Okay, Nicolene is saying that okay, I have been using trade ideas only so far. I'm only losing lately. Yeah, Nicolene, I think that's because we are not applying what we are learning. If we can apply, it's very simple. Just apply that 10 simple moving average on your daily time frame. See what it says. If it says buy, yes, go ahead and buy. If it says sell, and the idea is a buy, don't buy, wait for it to first say buy to you. Once you are happy with a buy signal, you go in, you buy, and you make money, and all the problems that of losing money that you're talking about are going to go away. Okay, Arun is saying, how do you make money one day market up, the next day down in a volatile market? Okay, I'll go back to you, Arun. Patricia is saying, I think this is sound advice. Declare as new traders is quite upsetting when you take a few losses in a row. Yes, I understand. It's not nice to take a loss, but I mean, like I said earlier, the main thing is to focus on the process. Do not focus on profit. Do not even think about money. I know that it's money that you're going to lose there, but I mean, at first, focus on the process. Focus on the process. Just make sure that you have a routine that you follow every day. Like maybe create a spreadsheet. Every time you see a trade, have a tick list that you follow. Does this meet all my tick list requirements? If it does, take it. If it doesn't, don't take it. Tick. Am I above the moving average? Yes or no? And so on and so on. That's what you need to do basically. Okay, Nicolene says, I hope so. Nicolene agreeing with, okay, Patricia, what about sell on this situation? Okay, well, I mean, Patricia, I will I will go back to what we always say. We say you mustn't go against your major time frame. But if you are an aggressive trader, someone who enjoys taking risk, you may decide to go in against them. I mean, a bigger time frame like your monthly. Like the first time that you were supposed to maybe sell was here on the 28th of Feb, when the price closed below, and it moved sideways for 4 days, and it went down again. Here also, it was okay for you to go short. That was on the 7th. On the 8th, you could have made something like 3.5%. On the 9th, you could have made 4.6%. And you were safe because, I mean, you were trading below your moving average. But you must remember that you are going against the main trend. Your monthly is still on a buy signal. It's only the daily that is saying sell because, I mean, it's just correcting. It's just coming back coming back a bit. It's a breather. It cannot go up in a straight line. You may decide to do that, but it's dangerous. You must understand that it's dangerous. Currently, selling first rent, I don't think that it's a good idea. The best thing is to sit on the sidelines, wait for your monthly to first give you a buy signal. The day you get a buy signal on first rent and it's agreeing with your monthly time frame, you can go in and buy first rent and you make your money. The problem is wanting maybe to trade every day sometimes. It's better to wait, be a conservative and a very, very disciplined trader. That's the only way that you can make money in the market. Even if you sit out of the market, well, I mean, even if it's 70% of the time, out of maybe, okay, let's just say maybe 50%, you get 10 trades, maybe you only execute like 5 and leave the other 5 because it doesn't meet your requirements. That's still okay. You still make money. In fact, you make more money than people who want to trade every day. Okay, it's better to wait. I know. Yes, it's very addictive, Patricia. But we must try and run away from that temptation, because I mean, we are trading not to enjoy it. You're trading to make money. So, if it becomes addictive, maybe you should just stop for a week. Don't open your machine, switch off your phone, and go away on holiday and forget about the market. Don't even listen to the news that are going to tell you about the market, because I mean, that way maybe you'll be able to gain your perspective again and be able to remain calm and disciplined. Arun, I saw your comment there saying that what do you do in this market? Today is up and the next day it's down. Yes, that's what happens. But if you follow this simple principle of the moving average, just following the moving average, I mean, even if the market does go up, uh, you, as long as you are on the right side of the market, you always save yourself a couple of bucks in this market, even if it is volatile. Because another thing that you need to understand, you need to make sure that you understand your support and resistance levels. Once you've spotted those, you are set. Okay, Patricia, I know. Okay. Thanks, Italy. I'm getting trained, but I will listen to you. Yes, I mean, yeah, Patricia, maybe that's what we should do, and we'll make a lot of money. We'll get to enjoy it more when we make money all the time, and we get our we get our we get our trades right. Okay, let's look at this trade that we touched on a bit yesterday. Patricia and Nicolene wasn't there. Nicolene Arun went there, but I mean, Patricia was there. Well, I spoke about true words. I said true words was on this rising trend. It's always been trading above this rising trend, but today we are down. Today we are down 1.15. I'm down 1.15. Okay, no, we're not down 1.5%. Today we are down below this moving average, so we need to check if today we close below this. Sorry, well, I mean, already we are below our moving average. We went below our moving average yesterday. Yesterday we went below, and today we are below this rising trend line here from the bottom here, late 2017 to date. So today we are below. If today we close below the rising trend line, there's a good chance that we're going to see more selling pressure on Truworths. There's a good chance that you're going to see Truworths falling even more. But right now it's trading around 99, 100. I don't really know what's going to happen there, but it doesn't look right to me. Yesterday we closed below our moving average, the 10 simple moving average. So it doesn't look great to me. I will be honest with you. Plus, there's another thing that we looked at. We looked at okay, no, it's not very clear here. We looked at these levels at the top here. Well, I mean, we spoke about this one in our morning meeting. The market traded up here in 2012. Immediately after that, it started falling. Was it 2012 or 2013? Oh, okay. It was the last week of December in 2012. First week in January, it started declining. It came down to about 65 rands or to 65 rands, and it started rising. It went back into this zone here where I have my cursor around 111.66 or 112. Around there, the market participants started pushing the price lower. They sold it there. It went down to about 63, 65. And again, this year, we pushed from 66 or from 63 late or middle of, okay, it was 2016. And late last year, we pushed up around November. We went up to these levels. The price went up to 115. And around these levels, to me, it looks like we are at the top of the range. It looks like, it doesn't really look like a triple top, but it almost looks like one. It almost looks like one. So I wouldn't want to participate here really. Let us wait and see what happens on Friday. If we get this big bearish engulfing on Truworths, I think there's a good chance Truworths is going to decline even more over the next couple of weeks. I think there's going to be a lot of selling opportunities on Truworths. I saw that maybe with a couple of other other retailers, but I mean at the moment the one that I'm really focusing on is Truworths. Truworths does not look good to me. I think it's going to be coming off over the next couple of days. If that doesn't happen, guys, you will forgive me, but to me right now it just does not look okay. So I just want to quickly go back to this trade. I want to see if it's really falling. Oh, okay, that looks nice. Well, I mean, this is the Euro Japanese, British pound that we spoke about earlier. To me, it looks like if we close below here on the hourly time frame, if we close below this line that I have here at 1 o'clock, we are going to see more selling pressure. coming through on this one. Just wanted us to check it. Do you still, guys? Did you still have the euro pound open? Did you do it, Nicolene? Patricia did it, I know. Arun, how about you? Did you do this currency pair yesterday? Did you not do it? Okay, but Arun, is very easy. You just listen to that video clip that is attached to the message that we send you. Because I mean, Jacques always says stuff. On the trade that this is why I think that this trade is a buy or a sell, and it tells you the volume that you can take. So just by listening to that and checking out that video, you can actually see exactly what you are supposed to do there. Nicolene, you're saying that you're not trading currencies yet, losing too much on CFDs, but the principle is the same, Nicolene. The principle is the same. Nothing changes. The principle is the same. Here, this is the reason that this trade was sent out. Well, I mean, this was yesterday. It was sent out on the 13th yesterday. The market had closed below this moving average here, and the moving average is now going flat. So that's the main reason why we are selling the euro against the pound, basically. And yesterday we were flat. The market did not really want to do anything, and today, so far, we are down like 22 basis points. I don't know if the sell-off is going to strengthen, carry on down. I don't know, but I mean. The principle is just the same. You just need to make sure that you have maybe your moving averages lining up with that trade set up. Okay, but I haven't traded my own ideas, only trading tips so far. I get the tips, analyze myself, then I play some trade tips. Those four so far in a row, very demotivated stage, scared. I understand exactly what you're talking about there, Nicolene. That you feeling very dejected so far, because I mean you've lost four trades in a row. It makes sense, but the thing is, you must always check each and every trade idea that you get. Do not just trade it blindly. Make sure that it agrees with your analysis. If it does not agree with your analysis, do not take it. This is what I always say. This is what I always preach to you guys. If it does not agree with your analysis, leave it. There are many other trade ideas that are going to look good for you. Hi, Charles. I see that you are using an Android device, Charles. I'm afraid you won't be able to see what I'm showing the guys on my screen here, what I'm demonstrating. You can only hear me, and doubt that will benefit you a lot. Yeah, if you have a laptop around or a desktop, I urge you to switch to those two. I urge you to switch to those two. Okay, I see Arun, you're busy typing a message. Guys, any other questions? Nicolene, Patricia, we don't have a lot of people today. We only have 4 people so far. So, guys, you can ask any question you'd like to ask. Well, I mean, I don't like using indicators. I don't like using indicators. I think they will just confuse you, and they are lagging. Like you can use your MACD and your RSI. I once showed the guys how to use the RSI. You can use the RSI maybe to as a momentum tool to see whether the market is going to be rising or falling. When your RSI is above 50, you know that that's a good market to buy. When it's below 50, it's a good market to maybe to sell. I can do that. I can do that on first rand. Let me try and do that on first rand. Let me get the daily. I'll do that on first rand. I'll use the RSI. RSI oscillators, relative strength index, default settings. Don't know if Arun you're going to remember this, but I think we did touch on it some months ago. Okay, I'm looking for a horizontal line. I want to mark 50 on this chart. Okay. Ah, man. Okay. It's on 50.4. This blue line. Every time when your RSI is above your 50 mark on your RSI, you know that that market is good to buy. You can always buy that market. Although sometimes it happens that maybe it dips below the 50 before pushing higher, but I mean you can use the 50 to check the strength in the market. In most cases, when it is above the 50, it's good to buy it, more especially if you are using it together with your moving average. Like here, it's above the 50. It's above the 50. If you check your price there at the top next to my cursor, you can see that the bar is above your 10 SMA, and the price started moving higher from there. It went lower, it went below, so you weren't supposed to do anything here until it went up here. And check your RSI. Your RSI is above 50, so it makes sense for you to go in and buy. Your RSI is above 50. Your moving average is above your 10 SMA, so it's good. You can go long there and take that trade. I'm not using it as a positive or negative divergence or any of those things over oversold levels. I'm not looking at those. I'm just looking at the strength in the direction of the trend. Okay, you see here, it went below your moving average here at the top. The price went below. Your RSI is still above your 50, so it doesn't mean that you can sell. And here on the 8th, check your RSI, bottom left corner there next to the spanner. The value on your RSI is 4904. Your value is 4904. It is trading below your 50 mark, so that is a clear sign that the trend is very weak. That trend is very weak. You cannot buy it because your RSI closed below your 50. Following day, the value of the RSI has gone down a lot. It's gone down to 43.40, and the price on that day again is down, and it started picking up on the 12th, and then the 13th it started picking up, but we're still below. Okay, let me see. Yesterday we went above the RSI. were 50.95, but we are still below the moving average. So it doesn't really make much sense for me to go in and take a long on that one. Let us kill this one and put the MACD. We're going to kill it and put the MACD. Is it in? Okay, yeah, it's here. Okay. We're going to kill it and use the MACD. Well, I mean, the MACD, we're just going to use the histogram. I like using the histogram when using the MACD. When the histogram goes above 1, I know that maybe it's a buy if it agrees with my RSI here. But it's very slow. It's very, very, very slow. Like, check here. My simple moving average is actually faster than the MACD. The MACD on the 9th was still below the moving average, although it was starting to slope higher or slope upwards. It was rising, but check your SMA. Your SMA, your price against the SMA, your price is above the SMA already. The price is positive. It's moving higher. Next day again, the market was up 2.76%. The MACD is still below zero. On the 13th, the MACD went above zero. It was 1.24. It was positive at the end of business or the following morning. You could go in and buy. You could have made some money on this one. And it went up, it went up, it went up, it went up, it went up until it broke below the moving average here. And your MACD was very close to crossing below zero. And the next day, your value is now negative. It's okay. Was it negative? No. Well, but it's below zero here. It's below zero here. Your value is negative. It's 0.1. It's 0.1 there. It's negative, and it stayed negative the whole time, which is the reason why maybe one was supposed to be selling first rand instead of buying more, especially if you are an aggressive trader. If you are a disciplined trader who is willing to wait for the market to agree in both long time frames and shorter time frames, you could have just waited and ignored this, because what the market is doing right now is putting everything on sale. It's going to get you better prices over the next couple of days. So comparing all these to me is a lot of work. That is why I just prefer using the moving average, because what MACD says is exactly what the moving average is saying. Except for one thing, divergence. Your simple moving average will never give you that divergence signals, whereas with MACD and RSI you can get those divergence signals. But I do not want us to look at those signals. I want us to try and simplify our trading process and make sure that we apply that same routine every day until you get used to it, until it becomes second nature to you. You don't even think about it. You know what you need to do in the market before you take a trade or before you do anything. Even if you lose maybe a couple of basis points while still analyzing, that's okay. Do that so that you satisfy yourself that the trade is looking good before you jump in. Okay. No. No, Nicolene, so far I don't have any trades. The trade that maybe that you need to check out is this one. I think it's Trueworths. Let's check where Trueworths closes today, and let's check what it does tomorrow. If tomorrow it, if today it closes below this rising trend line, we should monitor and see what happens in tomorrow's trading session, whether there is more selling or buyers will come back in and start buying the stock up again, but I doubt that will happen. I think that there's still going to be a little bit more selling happening here. Maybe that's one of the trades that you can look to short maybe over the next couple of days, but you need to be very careful. You need to make sure that you short them at the right levels. The market right now is very choppy, and tomorrow is the futures close out, so there's going to be a lot of choppiness happening in the market. So I suggest that maybe we just stay away from the market as far as possible, so that we avoid getting hurt in this choppiness that is there in this market. Oh, okay. You asked me to check SAP. Okay, so about that, Nicole. Well, sorry, Patricia. Let me have a look at it. Mm. Let's see if there's anything maybe around this area here. Well, according to the simple moving average on our monthly time frame, we are on. Well, I mean, we are in a period of weakness here in this market, because I mean, you check here, end of last year, the market went down 9.5%. We're below our moving average. The following month, January, we were down 6.5%. We are still below our moving average. And again in Feb, the market went down 7.74. We're below our moving average. And month to date, we are down 1.2%. I think we are flat. We haven't really declined that much. So this move, yo, I think is around maybe 23%. I don't know, since the end of December. But I mean, another thing that I'm looking at the rising trend line, because I mean, that is another thing that you must not forget. There is a rising trend line here. Our rising trend line is at $70. or 68, somewhere there. Is it $70 or 68? I think that's where our next support is after 70, after 73 or 74. Our current resistance is around 82.50 or around 82. That's where our current resistance is. Let's go to the daily chart now. Okay, I'm going to mark these two levels differently. Let me see. Yeah, fine. Fine. On SAP, we have 82. We have 82, 81.76 as our resistance. Around this area here, you can expect to see some buyers coming and selling off SAP. Well, I mean, you can see it right now. It's happening. The price is coming back from 81, 82 levels, and it's coming down. I expect the price maybe to finally get to 74 or 73, 79. 74, 73, 79. If 73, 79 fails to contain or hold the price, I expect to see the price coming down to 68 and finally coming okay, yeah, I think that's right, and finally coming down to 65, 65, 64 levels on SAP. Let us try and draw a falling trend line here. I want to see if we can get a nice one here. Let's see if we can get one. I'm going to try this. I just want to try this one out. I want to see if it. No, I don't like this one. You see here this thick blue line that is this is a falling this is a falling trend line. We had this moving average there. Right now, we need to wait and see what the price does. If we close below the moving average today, we close like this, there's a good chance tomorrow that we're going to see more selling on this, maybe coming down to 73.74, coming down to 73.74. But this line is very important. As you can see right now, the price is not trading past this area. I think it's because of this falling trend line. There could be people there thinking that this line is strong enough, or the market is testing this trend line because they think that maybe this was the breakout from the downtrend. There could be people thinking like that, but I doubt that is the case. I think there's going to be more weakness on. I think there's still going to be more weakness on SAP going forward. I think SAP is still going to come down to 74, 68, and finally to 65. But that's going to depend on what the market does. Our market is not looking very good. The Aussie or the top 40 is not looking good. I think at some point it's going to decline more. Nicolene, how do you draw the following trend line? What I mean What I mean, what markers did you use? Oh, okay. It's very easy. Like here, you like here. This is what I did. I connected this point and this point here. So this is how my trend line was formed, or what dictated where I put my trend line, and I expect the market maybe to come back down here to 64, 65 before bouncing higher. Here, what I did is I looked at the trend and I was just connecting. I was connecting the tops going down, because you see every time the market hits this trend line, it declines. It hits the trend line, it comes down. Try it here again. It came down, went sideways. It hit it. It went below a simple moving average. It came down. Here again, it came down, and uh, only here did we see the price maybe crossing above the falling trend line and moving higher. But sellers are coming back into the market, pushing the market lower, and your monthly time frame is also suggesting that the market should move lower. I don't know. Does it help, Nicolene? Do you understand a bit? Do you not use the bars above the line? No, no, no. I don't. No, I don't. I don't, Nicolene. I don't. Okay, Nicolene and Patricia. Thank you so much. Which last few bars, Nicolene? Which ones are you referring to? Okay, you're saying just confused why did not include the last few bars. Which bars? Are you talking about these at the bottom? These where I have Makesa on? These? Okay, because I mean, this was a breakout. The market broke out. I do not want to incorporate them. I mean, forcefully. If they are not cooperating, they are breaking out of the trend line. It means that maybe the market is now taking a new direction. So that is why I did not include them. I did not include them for that reason. But it seems like the market is coming back down to our trend line. We should just watch and see what it does when it gets to the trend line. Do we cross below the trend line and move lower, or we stay above this trend line? We're just here to test how strong this trend line is before moving higher. I don't know. We'll see what happens maybe over the next couple of trading sessions, but that is how you draw your trend line basically. Well, I mean, it needs to touch at least 2 to 3 times or more. 2 to 3 times or more, because I mean, if it's just 1 point, you do not have a trend. But I mean, if it's touched that area or your line 2 times, it shows that it's a trend. So the price is likely to come back and touch that area again. Okay, guys, you're welcome. Thank you so much for attending. Enjoy your trading. Please make sure that you are objective in your decision making. Do not just follow any trade idea. Make sure that those trade ideas are there to teach you. They are not there just for you to take. Don't just take them. Make sure that you scrutinize, analyze everything. If you don't agree with it, you can even send me an email. You guys have my email address, sihle@quicktrade.co.za. You can just send me an email and say, Sihle, because of XYZ, I do not agree with this trade idea. And that will make me very happy, because from the legal that I'm doing here, doing these webinar sessions, I want you guys to get something to make sure that you learn, so that one day if something happens to me, you know what to do. Okay, guys, thank you so much. Let's stay focused and disciplined and very, very, very conservative. Thank you. Bye bye. See you tomorrow. Thank you, guys. Thanks.